Hello there. Welcome back to Grade 11 Accounting. In this video, we want to look at a question of June 2023, and this question is on the preparation of income statement. So we're going to go through what we have in the question and then answer the question that follows. Right? The following information was taken from the books of armed traders on 28 February 2023, the last day of their financial year. The business uses a markup of 100% on costs. And then on the required part, we are given 3.1, which says prepare the income statement. That is statement of comprehensive income of armored traders for the year ending 28 February 2023. Then 3.2 is prepare the note for trade and other receivables. But for the sake of this video, we are only going to concentrate on 3.1. Then we go to the information part. It reads extract from the pre-adjustment trial balance at 28 February 2023. Right. This is an extract that we are given of a pre-adjustment trial balance that is at the year end of 28 February 2023. So very important for you to take note of the financial year where it's starting, where it's ending before you answer the question. So according to this question, it means our financial year is starting on 1 March. It's starting on 1 March 2022 to 28 February 2023. Right. So this is what we have. Then this is the trial balance that you are given. You'll see that it goes down. These are the figures that we are having in the trial balance. And if you go further in the question, you'll see that you are given additional information according to this question. So if you come here, this is our additional information on information B. It ranges from 1, and you go down, you can go through all the additional information that we have there. And then obviously, if you go to the next page, you are going to see that we are the continuation of this additional information. And then after this additional information, obviously, we need to answer the question according to the preparation of the statement of comprehensive income, that is the income statement. So if you come to the answer section, you'll see that this is our statement of comprehensive income or the income statement. Then this question has got 45 marks. Very important to take note, and it requires you to spend about on average about 40 minutes on that question, which is very important. Let's take note of the time required so that we don't spend time on one question. So this is what we have. So this is a statement of comprehensive income for the year ended 20 February 2023, and then we're given the sales here. And cost of sales is pre-entered is 1,757,000, and then we're given the gross profit. So we're going to start on the sales there to try to see what the figure for sales that we have. So if you go back to the question, I would want to go to the list of balances, that is the trial balance, and see what is the figure for sales that we are given there. So if you come here, you'll see that sales is here, and you see that sales we are given it as a question mark here. So what does it mean? It means we cannot have the figure for sales. We are supposed to find it according to the information that we are given. You can find it as a balancing figure, or you can calculate it according to the information that you are given in the additional information. So what you are supposed to do when the case is like this, first of all, you have to go through all the additional information to see if you've got any hint in terms of calculation of this sales figure. If there is no hint, it means that you have to calculate it after you have completed the other entries that are following, and then you come back to calculate it as a balancing figure. So if you go to the additional information, you go item by item, try to see what explanation do we have in terms of calculation of sales. So if you go through all the additional information, that is 1, 2, 3, I got it one by one. So to try to see if you've got any adjustment that is there that is can lead us to the calculation of sales. So if you come here, you'll see that we'll go now to the next page to try to find out if you've got anything in terms of the calculation of sales. So if you come here, you'll see that on item 12, let's come on item 12. It's saying operating profit is calculated at 20% of the sales. It means this one is also needs sales so that we calculate operating profit. So we are not going to be concerned about this one. And then we try to see if you have got any other information that we can use. You'd see that we don't have. But if you go to the beginning of the question, we have something that is there that can lead us to the calculation of the figure for sales. So if you come here at this section, we are given the business uses a markup of 100% on costs. The business uses a markup of 100% on cost, which is very important. Remember, when we say our cost price, we add our markup, you get your selling price. So this is what we have, we get our sales. So what does it mean? When we represent it in the form of proportions, we'd say that we are going to say this one is always 100%. And to add the markup depends with the question. What percentage of markup are you given? According to this question, you're given 100% as a markup, which means we've got 100 again here. And it means our selling price, which is our sales, is going to be 100 plus 100, which is going to be 200%. So this is what we have. So we can just maybe use proportion to find the figure for sales there. So what are we saying? We are saying if you go to the question, you'll see that the figure that we are given is cost of sales. So cost of sales is here. We've got 1,757,000. So it means our 100% as cost of sales is 1,757,000. So we go back there, try to see how we can arrive at the figure for sales. So what we are saying is basically we are saying our cost price is the one that you are given, which is 100%, which is equal to 1,757,000. So 1,757,000. And the figure that we are looking for is for the sales figure, which is 200%. So we are going to say 200% is the one that we want to look for. So if you present it in this form, it becomes simple. We can just use proportion, whereby we're saying what you don't have, which is 200% as a numerator, and what you have as a denominator, 100% times the given figure. So we are saying 200 is what we don't have as a numerator, and what we have is 100%, and then we multiply by the given figure, which is 1,757,000. So this is what we have. So if you do this, try to calculate it on a calculator, you'd see that the figure that you're going to get there is 3,514,000. So here we're going to get 3,514,000. As simple as that. So what you're supposed to do is just going to go and summarize this working in the answer section, and then you put your answer as 3,514,000. So if you come to your answer section now, you're just summarizing your working, whereby you are saying your 200% as a numerator, and then your 100% as a denominator, then you multiply by the given figure, which is 1,757,000. And the answer that we got there was 3,514,000. So this is what we have. Then having these figures now, we can now find the gross profit, whereby we are saying gross profit is equal to sales minus cost of sales. So if you say 3,540,000 minus 1,757,000, we are going back to get 1,757,000. So this is what we have. So we go to the next section, which is the other operating income. So we are going to go through the other operating income that we are given the question. We have got discount received, which is pre-entered as 19,600. And then we can go and check other income that we are having in the question. So if we come here, let's try to see what we have. So we are going to go down checking for those other incomes. We go down checking. So you'd see that discount received is the one that is pre-entered as 19,600. Then we've got rent income. So the next is here, which is our rent income, and it's 89,650. But you don't have to enter it as it is in the income statement. Remember, we need to comply with the matching principle or the accruals principle, whereby we say what belongs to this year, we record it this year, and what doesn't belong to this year, we remove it. In this case, we are going to add, if there is any accrual of this rent income or rent owing, we are supposed to add it. But if there's any rent income that was received in advance, we are supposed to subtract it as it doesn't belong to this period. So this is what we have. So we are going to check in the additional information to check what adjustment, if we have got any adjustment that we have of rent income. If you don't have, we just put the figure that we have in the list of balances. But if you come here, you'd see that we have got something that is explaining about rent income. It says a storeroom was rented out from 1 June 2022 at 11,000 rand per month. the rent was increased by 7.5% per month on 1 December 2022, provide for the outstanding rent. So very important, what we need to do first is to identify the financial period. Remember, we said it's starting on 1 March 2022 to 28 February 2023. So this is our financial year. But you see that this rent was rented out from 1 June, which was along the year, 1 June 2022. So we need to see how many months are there. From 1 June, you'd see that we are going to say the whole of June, July, August, September, October, November, December, January, February. So you'd see that there we have got 1, 2, 3, 4, 5, 6, 7, 8, 9. So we have got 9 months that we have there. So this which means this building was rented for 9 months. But out of that 9 months, you'd see that the rent was then increased on 1 December 2022 by 7.5%. So as the number of months after the rent was increased, we have got December, January, February. So we've got 3 months when the rent was increased. So it means when it wasn't increased now, it was from 1 June to end of November. So we are saying June, July, August, September, October, November. We have got 1, 2, 3, 4, 5, 6. So we've got 6 months before the increase of the rent. So we are just going to formulate a formula that we are going to formulate there so that we get the total rent that was supposed to be received. Then we compare with the figure that we are given in the list of balances. Then we can identify whether there was a receipt of rent in advance or it was an accrual of rent income. So we can just come here and say before it was increased, we've got 6 months and we are receiving 11,000 per month. So we are going to say 6 times 11,000. Then we get the total before it was increased. Then after it was increased, it was for 3 months. So 3 times the rent that we are having after. Remember, it was increased by 7.5%. So we are saying 100 plus 7.5%, and we are going to get 107.5%. So as a decimal, 107.5%, we can convert it to as a decimal, it becomes 1.075. We're just going to divide by 100 there, and then we get 1.075. So this is what we have. So with that now, it means we are going to multiply 1.075 times 11,000 so that we get the figure of after it was increased. So we are going to say 11,000 and then we multiply by 1.075, as simple as this. So if you calculate this as it is, you are going to see that the figure that you are going to get there, let's try to see. Let's try to calculate that one and see what figure are we getting there. So you'd see that the figure that we get there is 101,475. So we're going to get 101,475. So this figure is the one that we are going to compare with the one that we are given in the list of balances and see if there is a receipt in advance or is it an accrual. So we go back to check that figure that we are having there in the list of balances. Right, if you come here, you would see that rent income, the figure that we are given is 88,650. It means the rent income that was received is less than what was supposed to be received. So there is an accrual that is there. So you have to calculate the amount of the accrual, then we provide for that in the calculation. So we go back there and just make that calculation. So here we are saying minus 89,000 to get the amount of the accrual, minus 89,650. So here we are just going to say 89,650. And then if we subtract there, we are going to get 11,825. So what we are saying is 11,825. So this is the figure that you have. So this is an accrual of rent income of 11,825. So we are going to provide this in the calculation, providing we are saying we are going to show that there was an accrual of 11,825 by adding 89,650 plus 11 101,825, so that it arrives at the figure that was supposed to be received, which is 101,475. So this is just what we are going to do on the calculation section. So if you come here, we just summarize that calculation. So we are on rent income, so we are saying rent and in brackets, that's where we're going to show the working, where we're saying 89,650. And then we add the 11,825 of the accrual. And then we get back to the total that was supposed to be received, which is 101,475. So this is what we have in terms of our rent income. So we can go back to see on the next calculation. So from there now, we can now check other incomes that we have in the question. Remember, we want rent income here. So we go down to check other incomes that we are given. We've got donations, stationery, paid debts, they are all expenses, bank charges, and expense. Advertising is an expense. Then we go down, we've got sundry expenses, again an expense. Then we've got bad debts recovered. Remember, bad debts recovered is an income. And also you have to take note that all incomes, we show them on the credit side. And then expense. So we have got bad debts recovered as income there. So before we enter it, also we have to check in the extra information if we've got anything to do with debts covered, bad debts recovered. And then if you don't have, we just take 9,000 and put it in the income statement. But if you go there, you're going to go through everything to see if you've got anything to do with bad debts covered. So you go item by item, check if you've got anything to do with bad debts recovered. But if you go to item 8, you see that we have got an EFT of 2,000 rands from H Oma, a debtor who was previously written off. So whenever a debtor who was previously written off and comes back to pay back the money, it is bad debts recovered, which is in this case we've got 2,000. So we're going to add it to the figure that we are given there for bad debts recovered, which is 9,000. So we're going to say 9,000 plus 2,000. So we go back to the answer section and just summarize that. So here now we are saying bad debts recovered. So we are saying bad debts recovered. And the figure that we are saying there, we are saying we are going to say 9,000 plus 2,000. Then if you get the two, we are saying we're going to get 11,000. So that means we've exhausted all the incomes that we have in the question. So we are supposed to add those incomes, 90,000 salary plus 100,475 plus 11,000. And the answer that we are going to get there is 132,075. And then obviously to get gross operating income, we are going to say gross profit plus other operating income, then you get your gross operating income. So if you add 1,757,000 plus 132,075, you are going to get there 1,889,000, 1,889,000. Let's try to see. I'm sure answer there 1,889,075. So this is the answer. And from there, we now go to other expenses. So we're just going to pick expenses that were given in the question and put them there. So remember, we have some expenses that are already pre-entered there. We have discount allowed 13,350. Not going to be worried about that one. Then water and electricity again, 68,950. Insurance, 162,500. So this is how they are appearing in the pre-adjusted trial balance. What it means these expenses had no adjustments. So they are just going to, just picked the expenses that we are given in the list of balances, and then we put them there since they have no adjustment. So we go there to pick other expenses that are not these ones. We go back there. So here, remember, that's where we've got the list of those expenses. We've got discounts allowed. This one is pre-entered. And let's try to see insurance. Let's try to see insurance is also pre-entered. And then we go to telephone. Telephone telephone is not pre-entered, so we need to calculate it. So what we are saying is the figure that we are given in the list of balance is 61,950. Then we go to the additional information item by item to check if we've got any adjustment that has to do with our telephone. So you come here, try to see on this page there's nothing. So we go to the next page to see anything to do with telephone. Come to item 10, which is here. We are now here. It reads the telephone account for February 2023 was received with the cost of 1,800 rands. The amount will be settled on that one on 3 March 2023. So what does it mean? It means inside the amount of telephone that were given in the list of balances, we have got telephone which was supposed to be paid for a period of 1 year. It was supposed to be which was supposed to pay for a period of 1 year, but the amount will be settled on 3 March 2023, which means the amount is not part of the amount that we are given in the list of balance. Remember, the amount that we are given in the list of balance represent the actual amount that were paid according to each expense. So it means the amount that we are having in the list of balances is short of 1,800, which means there is an accrual that is there of 1,800 of telephone. So we're going to add this 1,800 to the figure that we are given in the list of balances. So go back, check the actual amount of telephone that you are given in the list of balances. See that we've got 61,950. Then we add to 1,800 to get the actual amount for that period. So we come here, going to say telephone, and it's just so we are saying telephone. Then in brackets, we are just going to show the working by saying 61,950 plus 1,800. And obviously, the figure that we are going to get there, 63,750. 63,750. So this is the figure for telephone. Then you go to check another expense that is following that one. So after telephone, we go down, discount received is an income, income is an income, then we have got donations for 2,750. So this is an expense also, 42,750, but we go to additional information to check any item that we have in terms of donation. We have got the first item, item 1, goes with the cost price of 90,000 before stock taking. We had donated to a local community that was affected by floods. No entries have been made. No entries have been made. So it means this figure for 19,000 for donations has not yet been adjusted. So we need to edit the figure that we are given in the list of balances, which is 42,000. We have got 42,750. Then we add 19,000. So we go to the answer section to just summarize as such. So here we are saying donations. In brackets, we are saying 42,650, and then we add 19,000. Obviously, the figure that you get there, you get 61,750. And then we go back again to check other expenses that we are given in the list of balances. So after donations, we've got stationery. So for stationery, the amount that we are given here for stationery represents the total amount of stationery that was bought for that period. But we need the stationery that was used. Remember, we can have stationery that will be remaining at the end of the period. That one is not part of expense, so you need to subtract it from the total amount that was bought to get the expense amount. So we go there to check the balance of stationery at the end of the period. You see that we are given it here is 2,000 100. So, but if you go to item 2 again, it reads the owner took stationery for his son's use. The bookkeeper made the following entry. So remember, instead of subtracting, remember this statement was taken for own use, which means these are drawings, and the entry was debiting drawings, which was correct on this part, but on the credit trading stock, it's a mistake. It was supposed to be credited for the stationery account. So which means for the stationery, we also have to remove 2,500 there. We have to remove it from the trading stock account and then adjust it in the stationery account. So what it means is in the stationery, uh, we are going to subtract again 2,500, which was taken for own use, which is not part of our expenses, and then we subtract now this one that is there at the end of the period. So the symbol is that. So we go there, check the actual amount that we have for stationery. We have 120,150. So we're supposed to subtract the drawings part of stationery, which is 2,500. Then we subtract the stationery at the end of the period, which is 2,100. So we go there on the answer section, just summarize such. So here we are saying stationary, and then in brackets, we are saying the amount that we are given in the list of balances is 128,150, representing stationery that was bought. Then we subtract the drawings of the stationery. Then we subtract the figure that we had at the end of the year, which is 2,100. So this is what we give. So we'll calculate it correctly. We are going to get, let's try to see, let's try to calculate that one. We'll get 123,000. 123,500. This is the figure that we are going to get there. Then I will go back again to check another expense that we have. So after stationery, we are working bad debts. So our bad debts, we've got 30,600. But you go to the additional information to check if you've got any other bad debts that we have in the person. So if you come on item 4, it reads the data A just was declared being insolvent. Instead paid 25 cents in every rand. The business received EFT of 9,000. The transaction was not reported. The rest of the outstanding balance must still be written off. So this is also a bad debt. So the balance is supposed to be paid debt. So you have to calculate the balance. Remember, they're saying 25 cents in every rand was paid, which is 9,000. So we are saying 25 is equal to 9,000. And then the remainder is obviously 100 minus 25. Then you get 75. So the remainder is 75, which is the one that we are looking for that must be written on. So we just make a proportion by saying what you don't have is a numerator 75 and what we have is 25 and it's denominator, then you multiply by 9,000. But then if you do that, there you're supposed to get 27,000. So 27,000 becomes our bad debt, which you are supposed to add to the figure for bad debt that we are given in the list of balances. And remember, for in the list of balances, we are given 30,600. So we add it to 27,000, get the total. So here we are saying bad debts. So in the brackets, we are saying 8,600. Then we add our 27,000. Then the total that we are supposed to get 57,600. Then we go back there to check other expenses. So after paid tests, we've got bank charges, which we have 8,000. So we check again in extra information if you have got anything to do with bank charges. But if you come here at the end of the first page here, the bank statement was reviewed the following items that have not been supported in the relevant cash journals. So we've got some bank charges that are here. Remember, we've got service fees. Let's just try to pick them. We've got service fees, and then we've got credit card levy. It's also a bank charge. Then we've got ATM deposit fees also as a bank charge. So we are going to say 365 add 140, add 225. So this is what we get. So if you add the all of them, you would see that the figure that you get there is 730. So this is total of the bank charge that you are going to add to the figure that you're given in the list of balances. So if you come here, you're just going to summarize as such by saying here bank charges, whereby we are saying the figure that we are given in the list of balances is 8,000. But the 730 additional information, we're going to get 8,730. So this is what we have. Then we go there again, try to identify another expense that we are having. So after bank charge, we have got advertising. Advertising is 139,050. 139,050. So we go there again to check if we've got anything to do with advertising. We can try to check each and every information. See that here we seems as if we have got nothing to do with advertising. But if you come to item 9, the business entered into an advertising contract with Mickey Advertising Group, an annual premium of 64,400 for the period ending 31 July 2023 was paid in full on 1 August 2023. So it means we've got an advertising amount of 64,400 inside the amount that we are having in the pre-adjusted trial balance of 64,800, which is for a period which is extending our normal financial period. Remember, we indicated our financial period from 1 March 2022, 28 February 2023. But this period is from 1 August 2022 to 31 July 2023. So it's here's an extension of how many months. Let's try to see. It means the whole of March, April, May, June, July, and then it ends there. It was August, it was 1 August. So you're saying 1, 2, 3, 4, 5. So 5 months are supposed to be removed as they do not belong to this period. So we are saying 5 over 12 times this amount that we are having, 64,800. If then we get the amount of the prepayment of premium. So if you calculate it as such, then we are going to get 27,000. Let's just try to verify that figure. We're saying 5 divided by 12. Then obviously we multiply by 64,800. Then you're going to get your 27,000. So this is the amount that we are supposed to remove. This is a prepayment, remember? It's the insurance that was paid for months that are not in the financial period. So we are able to subtract them. So we go there on the other section and just do that. Here we are saying advertising. In brackets, the amount that you are given in the list of balances 134,050. Then we must subtract our 27,000. Then we are supposed to get 112,050. So this is what we gave according to advertising. Then we can just go there again. Try to identify any other figure that we have after advertising. We have got sundry expenses. It's a question mark. So what you have to do if it's a question mark, you go to the additional information to see if you've got any adjustment to do with sundry expenses. And then if we have it, we adjust it to find the figure of sundry expenses. But if you don't have it in the additional information, it means you have to find it as a balancing figure. So we go there, check on sundry. Anything to do with sundry, which means we are going to go item by item, see if we have got anything to do with sundry expenses. And then we go to the next page, you see that we are having nothing to do with sundry expenses. So in this case, it means we are just going to write sundry expenses here and then leave it blank. We're going to come back and calculate it as a balancing figure. So it can just leave it blank there. Then we go back to the question again to see if we've got any other expense. If you go to the list of balances, like what we're doing, see that the last item is just recovered, it is an income. So we have exhausted all the expenses in the list of balances. So we go to additional information to see if we have any other expenses that are mentioned there. that we don't have in the list of balance. So if you go down, let's try to see. You have to calculate the issue of trading stock. Trading stock, if to see if it is a surplus or deficit. Remember, if there is a trading stock surplus is supposed to be under other income, then trading stock deficit and other to be under expenses. So to calculate to see if you have got a surplus or a deficit of trading stock, you can just say book value of trading stock minus the physical stock take figure. Then the answer that you are supposed to get there, if it's a positive, it means it's a deficit. But if it's a negative answer, it means we are going to get a surplus. So the simple that. So we are just going to identify that. So the book value is the figure that you are given in the list of balances. So you'd see that. Let's try to see the figure for trading stock that we are given in the list of balances. So we've got 371,900. So come here, we are saying 371,900. Then we subtract the physical stock take figure. So on the physical stock take figure, remember we have this amount of 2,500 that was credited to trading stock but was not supposed to be credited. So by crediting, we are subtracting. Remember, when we credit a current an asset, we subtract. So we subtracted 2,500 trading stock, which was not supposed to be subtracted. So we are supposed to add it back there. So what we are supposed to do is first we are supposed to add it back 2,500, and then we check now the closing balance of the trading closing balance of the trading stock. Obviously, we find it here. Physical stock take figure, and following which is 326,600. We are supposed to subtract it. But before that, again, we have on item 1, go to the cost price of 90,000 for stock taking. We are donated to a local community. So we have 90,000 also, which is not part of our trade of our close trading stock, which was donated. You are supposed to subtract again. Remember, no entries were made on this donation. So we are supposed to subtract again 19,000 there. So we're saying here again minus 19,000. Then we subtract now the figure for physical stock count, which is 326,800. 326,800. So we are saying here, let's try to see. So here we are saying minus again 326,600. Then if you calculate it very correctly, that figure, you are going to get your amount. Let's try to see. 20,800 is our deficit. Remember, you are going to get a positive, and a positive we said it will be a deficit. So this is our deficit, which is an expense. So we come here on the other section, and this is our trading stock deficit. So in brackets, we are just going to summarize as such. Remember the answer that we just summarized the working year. Then the answer that we're supposed to get there is 20,800, like what we got there. So we have got 28,800. Then obviously, again, we check other expenses that are in the additional information that we are not given. Come here with provision for bad debts, which was increased by 17,800, 17,600 was increased to 17,600. So we are just going to subtract the figure that we are given in the list of balance and identify if there's increase or a decrease. Remember, we have 17,600 here, so we come here, check the figure for provision for bad debts that we are given in the list of balances. So you see that we have got 17,000 as our provision. So it moved from 17,000 to 17,600. So this is what we have. So this movement is representing an increase. So if it's an increase, it will be an expense. But if it's a decrease, it will be an income. So in this case, it's an increase of 70,000 minus 17,000, which is 600. So we can just go and try to summarize that in the list of the working part. So we come here, we say provision for bad debts. So we are just going to say 17,600 minus 17,000. You get your 600. And obviously now, obviously we are supposed to have depreciation, which is common in almost all questions. So we try to see the figure for depreciation that we are given. Here we don't have anything to do with depreciation. But you can go down to check here, see that if you come here, we've got depreciation that we are given here. We are given as calculated figures, vehicles depreciation of 161,250, equipment 33,040. We add the two to get the total for depreciation. So here we come here, we are saying our depreciation. Depreciation in brackets, we are saying 161,250. Then we get the other part, which is 63,040. And the total that we are going to get is 194,290. And then having done this now, we can now find we cannot find the figure for total expenses since we don't have the figure for central expenses. So what it means, what the total for expenses which is supposed to come here with other operating expenses, we are not going to, we are not yet able to calculate this figure. We can leave it blank again. Then obviously the next item is going to be operating profit. Then you check in the question if you've got anything to do with calculation of the operating profit. But if you come to item 12, it reads operating profit is calculated 20% of the sales. As simple as that. So the sales figure, remember we have it. So you're going to say 20% of the sales figure that you get is the operating profit. So if you come here, you see that the sales figure that we have is here, which is 3,514,000. So you're going to say 20% of 3,514,000, then you get your operating profit. So here we are saying operating profits, we can just show the calculation by saying 20% as a decimal is 0.2 times 3,514,000. Then you get your figure for operating profit. So if you do that, you're going to get 702,800. So here we have got 702,800. So having done this now, we can be able now to find the figure for other operating expense. So remember, when we say gross operating income minus other operating expense, you get your operating profit. So get now this figure for operating expenses. We are just simply going to say this figure that we have for gross operating income. Basically, we are saying gross, get the figure for other operating expense, other operating expense. We are going to say it is equal to our 1,889,075. And then we subtract the figure for operating profit that we got, which is 702,800. And then the figure that you are supposed to get there as other operating expense now is going to be 1,186,175. So remember, we are supposed to subtract operating expenses, so we are supposed to show it in brackets. So this is what we have. So to get now, we have now our figures up to our operating profit. So we can go down now to see the figure for profit before interest expense. Remember, the interest income is already pre-entered, so we are just going to say 702,800 plus 780 to get your figure for profit before interest expense. So if we add the two, we are supposed to get 684,000. 684,005, so 703. Sorry, this is a wrong figure. So here we are supposed to get 703,508. 703,508. This is 703,508. So this is probably for interest expense. Then we have to calculate the figure for interest expense. So we go to the set formation to see how to can calculate that figure, but we've got information that we are given here that we can use to calculate the interest expense. So remember, we are just going to employ the formula that says opening balance of loan, which is 800,000. We add interest capitalized, and then we subtract repayments, then you get your balance body at the end. So basically, what we are saying is opening balance of loan, it's interest capitalized, you subtract the repayments, then you get your closing balance. So we just substitute those figures. For opening balance, we are given it is 800,000 here. So we are going to say 800,000 plus interest capitalized is what given, it's a question mark here. Then the repayments is a question mark, but we are given a hint, 16,000 per month. So it means for 12 months, we are going to say 16,000 times 12. So let's try to see 16,000 times 12, we're going to get 192,000. So we get 192,000. And then if having the repayments now, we just substitute there for the formula that we put there, 192,000. So then you see that's 122,000. Then you get your closing balance, which is 691,000. 691,000. And then having done that now, we can now find the figure for interest capitalized by making it substitute the formula, whereby we are saying 691,000. We take 800,000 to the other side, it becomes a negative. We take 192,000 to the other side, it becomes a positive. Calculate that way, the answer that you are going to get for interest expense is going to be 83,000. So this is exactly what you are going to put on the answer section. So we come here, profit before interest expense, and then we've got interest expense. Then we can just summarize that working, whereby we are saying 691,000. We hit 192,000. Subtract 800,000. Then we get 83,000. So this is what we have. And remember, we are subtracting, so we say put in brackets. So you're going to 703,580 minus 83,000. Then you get your figure for net profit, for the year, which is this one. And we get your 620,580. So this is our final figure for net profit for the year. Thank you for listening. Those who will subscribe, please subscribe and share. We're still coming about videos as we prepare for exams. But as for this video, I'm signing out.